The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September 21st magnificent Monday edition of today's Trader's Edge. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there had a fabulous weekend. I know I did. Great to be back with you. Let's make sure we have an extraordinary day. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find a gift in every set of circumstance that life is going to toss at us today. We're going to go take a look at the circumstances of the bulls and the bears, what the buyers and sellers are communicating to you and I. And I'm absolutely grateful for your presence here this afternoon. So what I want you to know is I'm here to serve you. So feel free, pick up that phone, dial on in, 877-927-6648. Internationally, 727-445-1044. Of course, you can send me an email, steve@tfn.com. I'll try to get to those during the show, as well as posting comments inside our Tiger's Den. As we kick off this hour, it is Magical Monday, and this is Tiger Financial Network. Of course, I'm Steve Rhodes. Welcome to the show. The Dow, she's up 39 points, trade at 16,424. S&P is up a point and 3/4, trade at 1959. NASDAQ Composite down 20 points. Russell's down 3. The FTSE closed up 4.5 points. The DAX closed up 32 points. Gold's trading back $6, trading out 11.31. Silver's up a nickel. Light sweet crude up $1.48. Leading the charge dollar-wise, the upside. Priceline's up $6. Tesla's up 5. Equinix is up $3. Tower Watson up $3. Canadian Pacific Railway, that's up $2.70. We'll go take a look at that. Leading the charge to the downside, we got Regeneron Pharmaceuticals off $20. That's down 3 7/10%. Ultragenics Pharmaceuticals off $18. Down 14%. Dalian Pharmaceuticals off $17. The IBB itself down $16. That's down 4.5%. Biogen off $16. So we'll go take a look at what's going on inside the IBB. But first, let's get a feel as to what's really going on in the markets here, because we've had swings really in both directions. And, no better tool and technique to use out here, because the markets have been telegraphing these moves to the upside and the downside. Let's not forget the type of market that you and I have been in for the entire year. Pretty much a sideways market out here. That means that this is a trader's paradise. This is almost better for day traders than it is for anything else. A lot of frustration. But as the market was moving lower last night into about the 9:30 time frame out here, price was moving lower just after the futures market opened at 6 o'clock. Price was moving lower with less relative weakness out there, right? That's that little black line that goes across the bottom of my screen. That didn't make one of our favorite wave patterns, which would be a seventh wave. Anytime you get above or below the fourth wave, you're always looking for potential reversals. In this case here, we got that reversal. What did the market do as it was punching up into a high around, what time was it, around 10:30? I was in the long trade on that and exited that long trade. Should have taken the short trade, didn't take it, but certainly should have. And should have because why? Price was moving higher with less relative strength. So the same pattern that formed that bottom, take a look at that, 5 waves to the downside, 5 waves to the upside. Nice reversal signal that we finally got here, this little evening star at about 12 o'clock. At that stage, the market had moved far enough away from a price, what I will call good Lord, talk about a brain contusion out there, with regard to a reward to risk trade. I just said, I'm just going to sit tight. Plus, price was up against that little black horizontal line on my screen out here, the 1954 level, which should hold that support. It hasn't. Kind of been blown away. Today we'll see if that now acts as resistance on the bounce higher. Now, no patterns to the downside as you and I speak right now. On a 10-minute chart out here, if we just simply use multiple time frames, on the 10-minute chart, same real pattern that you and I just looked at, with one exception, is to the upside this morning. What we got to was that seventh wave. So you had price relative strength divergent pattern, both on a 30-minute chart as well as on a 10-minute time frame out here, and that's what really cemented the current high that we've got in place right now. As you and I scan these charts, 10-minute, 30-minute charts, 120-minute charts, there are no reversal patterns that are in play right now. So what is the market going to do from this point forward? That's an excellent question. But if I had the answer, I would absolutely give it to you. The Nasdaq's the one that has been brutalized the most. So let's go check in on the Nasdaq. That's down 21 points right now. What you'll see on the 30-minute, oh, this is interesting. Let me pull this over here. Let me see this. So what took place this morning, now the Nasdaq, as it was making its bottom last night, it did not have a price relative strength divergent pattern. The E-mini did. However, as the market was making its top earlier this morning, the Nasdaq did go ahead and create one of those patterns out here. Now, from the highs, so this is pretty interesting. So from the highs out here, the highs that I'm referring to are going to, we'll call it the Janet Yellen highs out here from last Thursday afternoon. We saw that spike higher. If you were to start your count from that high all the way down to the bottom, it actually just came in a little while ago. Doesn't mean that it can't go lower. But at this stage here, you can count that as a seventh wave as well. No price relative strength divergent pattern or anything else along those lines. We'll see if, in fact, that we get a lower low during this 30-minute session, which doesn't end for another 17 minutes. If not, that says somebody could take a long trade and put your stop one tick below the low of that candle session, which if I give you that price point out here, I'll try to, that would be at 42.86.50. So all you need is one tick below that. That would be your stop on these markets that trade in both directions. But let's not stop there. Let's continue to see if we can try to find some type of pattern out here that gives us some type of feel as to what the market wants to do. And I'm on another screen that you don't see right now, just popping up with a couple of charts, and there's not anything that I see out there. So let's go ahead and let's move over and take a look at our summation index, get a feel for what's going on across the board out here in the markets. Again, the left-hand panel that you're taking a look at if you watch us on TigerTV, that's the New York Stock Exchange. Dead set in front of you. Dead center is the NASDAQ composite. And off to the right-hand side is the Dow. And so we've got a market here where we do not have uniformity. Uniformity is not a good word to explain this. We don't have synergy. Let's call it synergy. That's right, synergy, the word of the 80s out there. So we don't have synergy with regard to what the markets want to do, because if we take a look at the price oscillators for all three of these indices, they are communicating to you and I that it's actually the buyers that are still in control of the market. These got to get down below zero. And most specifically, you want to see the New York Stock Exchange, the wider swath of the market, do that. It has not done that. In fact, right now, you get the New York Stock Exchange just trading pretty much near what I'll call the 0.382 retracement of the last move down. That's the move off of the August 10th high down to the August 24th low out here. But that retracement isn't so important. At this stage here, I think the only thing to focus on and take a look at, there's certainly gaps amongst this New York Stock Exchange start. We see a little bit of a gap down from that little doji shooting star candle that took place on September 17th. So there's a little gap out there. So resistance could be inside the New York Stock Exchange, the bottom of the September 17th area, 10,200. Hey, if you're one of those people, I'm not in this camp, but if you're one of those people that believe that gaps get filled, well then, you must be anticipating that the New York Stock Exchange is going to go ahead and move up to the low of August 20th. Because between the August 20th and August 23rd or 21st session out there, you've got a nice little gap. The low on August 20th is at 10,475. The top of the August 21st level, that's at 10,426. You can't have it both ways. Of course, you can have it both ways if you want, but you can't. You really shouldn't be saying, hey, on one side, the market's going after a gap that's down to the bottom, and that it wouldn't try to fill itself to the upside. At this stage here, New York Stock Exchange has not provided you or I with any type of clear signal that it's ready to head south. It is trading inside the August 24th swing point. That's a problem. That's a potential problem. So the number you want to be watching today, because on Friday we saw the New York Stock Exchange close inside that swing point. The top of that is 10,068. You're trading at 10,051. If at the end of today's trading session, the NYSE closes above 10,068, you're going to have a rejection on price. Will it be on volume? I don't know. We'll go take a look at some ETFs and try to figure that out. But at this stage here, any close above that would then say synergistically, don't think that that's a word, but we're going with it, between the price oscillator being above zero and then rejecting the August 24th swing point, that then at least price ought to go fill in the first gap, either from the trading session of September 17th or all the way back that August 20th period out there. If we take a look at the NASDAQ composite out here, the NASDAQ composite, a key level, in my opinion, if we take a look at this stock chart out here, the key level that I was looking for to give you some type of feel that the market wants to move higher or lower is the bottom of the May 6th area, right around the 48 to 88 level. Now, two trading sessions ago on Thursday, we saw price get up, test that level, close, I think, just slightly on it, just slightly above it. Of course, the actual top of that session ran right into the 50-day exponential moving average. Right now, that's priced at 49.53. That held as resistance out here. The NASDAQ composite's taken a bit of a hit because the IBB, maybe some other things out there. We'll go take a look and see what's going on with the IBB as well as Apple and a few others. But at this stage here, until that price oscillator gets below zero, it's at 28.42. It's just as we have more sideways actions. We have, start to take a look at those patterns that I shared with you and trade them to both sides, take your money off the table, or just trade to one side but take your money off of the table out there. If we go take a look at the Dow out here right now trading out at 16,453. Price oscillator still above zero. No confirmed signal to the downside. If we got confirming signals to the downside, what I would tell you is that the message of the market is that the markets are going to move lower at least through the rest of this week, maybe longer. But we don't have that message as of 1:18 p.m. on September the 21st. If we go take a look at the 300-minute charts here for the futures contracts, what we're going to see is the resistance areas that you'll want to pay attention to on any, as well as support levels. So if we take a look at resistance levels, we start off with the upper left hand. Let's just go ahead and blow that screen up. You take a look at the ES mini. You can see the price as it was making that seventh wave in the 10-minute chart, that fifth wave in the 30-minute chart, price relative strength divergent patterns in both of those. Guess what else price was doing? Running right into resistance, which was the top of its TAS market profile, 1969.65. Well, you can't do that. 1969.50 is what we'll call it. And guess what the actual high was? 1969. Now we've got support. Support inside the ES Mini down at 1944.25. Steve Rhodes with TFNN. We'll be right back, folks.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow is up 72. S&P is up 6. So let's go back to the 5-hour charts here just for a moment because they're giving you some really good numbers to identify support and resistance levels out here. We were taking a look at the S&P 500, so the ES Mini. Let's just come back to it. So the levels you want to be watching for today, 1942, we'll call it 1943. That's the bottom of that 5-hour chart. And the top of the 5-hour box out here is 1969. We'll call it 1969.75. You get a move above that, that tells you price is going to run higher. If you get a move below that, tells you price is going to run lower inside of the marketplace. If we take a look at what's going on inside the NASDAQ, even with that little bit of a rout and sell-off inside of the IBB out here, and we'll go take a look at that. We can see that at this stage here, the body of the candle, which in this case here, the body of this candle doesn't complete until 3 p.m. So you've got an hour and a half or so. But watch for the price point of the bottom of the box, 43.06. To hold this support, and resistance 43.65. Again, breaks above, breaks below will help you to identify additional market direction out there. If we take a look at the Dow futures contract, price was not able to push down all the way down to the bottom of that support level, which is 16,264. Our resistance inside the Dow is going to be 16,490. Those would be the numbers that you would want to be paying attention to give you a feel if there's anything more than just simply this great sideways-ish type action out here. Had a request to go take a look at a few stocks, so let's go do that. One is ticker symbol SNH, senior housing property or something along those lines. And if we take a look at this, it's trading at 16 and a quarter out here. We can see this made a low recently back on September the 10th with 1.8 million shares. Now, as price was moving down, what you'll notice, you and I, we took a look at that pattern on the 30-minute on the 10-minute charts out here, where we had price moving lower and doing it with less relative weakness. Well, guess what? This ticker symbol here, SNH, was doing the same thing on its daily time frame out here. And price had moved lower into the September 10th area. Then you had a nice little bullish reversal signal, little bullish engulfing candle, little morning star reversal, little 3-candle bullish pattern out here. And now price has moved higher. Now price is going to run into potential resistance out here. Those resistance levels being that gap to the downside that took place on the trading day of August 24th. No big surprise there. Now there was 3.7 million shares as price had gapped down. We'll call it the bottom of the gap is 1632, and the top of the gap is 1655. We're taking the low of the trading session from August 21st. We're taking the high of August 24th. At this stage of the game, prices tested the bottom of that gap. 1632 is what I said was it. We've actually seen price move up to 1631. Lighter volume, so you got 800,000 shares going into that little downdraft that had 3.7 million shares. Even though you've seen a nice little bullish reversal signal, this has to close above 1655 in order for it to move higher out here. Where would it move to? If in fact it could move higher, we can take a look at trend lines, things of that sort, retracement levels. And all those are good tools. Let's just take a look at this little trend line here, see where this thing is pretty much at. So, in essence, you can say it's just above the trend. If we take a look at retracement levels from that candlestick that we took, I grabbed the wrong tool out here. Let's grab the right tool. So from the trading day of March 23rd down to the low on September the 10th, if it can clear 1655, pretty darn good chance you're looking at 1810. Otherwise, this is up against some resistance. If we take a look at ticker symbol STWD. Let's go, STWD. Let's go see what this is. And this is Starwood property. Okay, so if we take a look at Starwood, really a similar type of setup. Now, we don't have that price relative strength divergent pattern. We do have that gap down on August 24th with 6 million shares. If we take a look at natural level of resistance in it, if I were going to teach you how to short a stock, which would either be, or buy a stock, buy a breakout, sell a breakdown. Well, in this case here, we've got the breakdown. Starwood has come right back to the level of resistance where it broke down, gapped down on August 24th with 6 million shares. It's gotten up in that level with 1.7 million on September 17th. Then on Friday, 2.4 million, and today 897,000 shares. Seems like even lighter volume. So Starwood is really up against resistance. The better bet, if you're looking to go long Starwood, is let this test the low from August 24th, or if this will clear the resistance level, what you would anticipate then is a move up to its next area of resistance, right around the 2251 area. And that is on ticker symbol STWD. Dow's up 73, S&P's up 6, composites off 3, Russell just slightly green. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pezzavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 66, S&P is up 5, Composites off 6, and the Russell is up a quarter. So leading the charge here to the downside, the NASDAQ Composite. The IBB, all you have to do is look at my screen out here. You got Biogen, Regeneron Pharmaceuticals, Bluebird Bio, Ultragenics, the IBB itself, Valiant Pharmaceuticals, Clovis Oncology, Intercept Pharmaceuticals. I mean, you know, basically all of these to the downside. So let's go. We probably can get a clue as to what the market is trying to do, at least the NASDAQ, right? We took a look at the NASDAQ. We see that the summation index, we see that it's still positive, moving to the upside. The trend is still to the upside, price oscillator above 0. But let's go see what this index, this sub-index here, is doing. Now, in order to really understand what's going on inside the IBB, we really need to take a look at, in essence, the top 10 holdings out here. So on a, I can pull those up for us. Problem is, I don't think I can get this to stay. Oh, you know, there is a way that I could get this to stay. I was just thinking about it. But here are the, this is as of September 18th. Okay, so we know that Biogen, BIIB, represents 8%. Celgene, 8%. Gilead, 8%. Regeneron, about 8%. Amgen, 7 6/10%. Illumina, 4%. So let's see. The top 245, 8 times 5, 35 plus. So we're probably closer to 40% on just the top 5. So all that you and I need to do, let me just change this link here so there's no symbol at this stage. And that'll just, I'll keep that on a separate pad of paper. There we go. Okay, so let's go take a look at what the top 5 are doing out here. We'll start with Biogen, BIIB. That happens to be the dollar leader to the downside. It's off $16, down 5%. Now, what Biogen hasn't done, what's odd, what's interesting here, is you know what I should first do is start with the IBB. Right? Let's take a look at the ETF, then let's go take a look at the top 5. And then what I just said would make sense to you. If we take a look at the IBB, what you and I are going to notice here is that it is testing. Thus far today, it's testing the top of that August 24th swing point. You and I took a look at that in relationship to the New York Stock Exchange. Now, with regard to the IBB, the volume to the downside on August the 24th was 4.8 million shares. You've done 3.6 million shares as of 1:36 p.m., September 21st out here. Says to me that the IBB is moving into that swing point with volume out here. However, we need to really go see, and maybe the top 5, which represent 40%, of the ETF, are going to say the same thing. But let's just go check. Let's just confirm that to be the case. Now, if volume really lightens up out here inside the IBB, there's no buying, there's no more selling for the next couple hours, 2.5 hours out here, and you end up with less than 4.8 million shares, and the IBB closes above 340.23, that's what's referred to as a rejection on price and volume. If, on the other hand, price closes above 340.23, but you've got the volume, meaning more than 4.8 million shares, says price will at least get down and test the top of that. Will it get into that box? Who knows? Now, if it closes inside 340.23, that sets up the opportunity for it to run all the way down to the bottom, 284.16. So hopefully that gives you the scenario as to what the IBB is saying or suggesting at the moment. Right now, it has rejected that on price, not on volume, but on price. Now let's go take a look at the Biogen. BIIB is the ticker symbol. And in the case of Biogen, I thought what was interesting is it has not gotten down to its August 24th top. And that top is priced out at $295.15. Volume inside of Biogen is 5.8 million shares on that trading session. It has only done 2.4 million shares. By my math, the market opens at 9:30, 10:30, 11:30, 12:30, 1:30. We've gotten 4 of the 6.5 trading hours out of the way. Even if you multiply this times 2, and Biogen hasn't got down to test that swing point, but it's pulling back with lighter volume. That's what Biogen is doing, which is the number 1 weighting inside of the IBB. That has to make you say, something to think about. It is moving back with volume, but hey, on Friday, it did volume of 4.6 million shares. I don't even know it's going to do 4.6 million shares today. So the number 1 weighting structure inside the IBB is pulling back on light volume. Let's go check out the number 2 weighting, CELG out here. Let's go see what Celgene is doing. If we take a look at Celgene, this is inside that August 24th swing point, which is 120.20. Now that swing point has 11 million shares. You are inside that on light volume. 3.8 million shares out there. 3.8 million shares, right? So if today Celgene, the number 2 weighting structure, represents 8%, closes above 120.20, we already know there's like almost no chance in all heck that Celgene is going to be able to get the type of volume that August 24th swing point has. So if it closes above 120.20, you're going to have a rejection on price and volume inside of Celgene, the number 2 weighting structure. Let's go take a look at Gilead. GILD is the ticker symbol. If we go take a look at it, the August 24th swing point, the top of which is 106.67. The volume on that day, August 24th, 25 million shares. You've done 7.6 million shares. Not a chance. 4 of the 6.5 hours of trading are done. Straight line math, there's no way. There has to be a stampede to the door in order for that to take place. If, in fact, Gilead closes above 106.67. You'll have a rejection on price and volume. If it closes inside that level, well, then Gilead is likely headed to the swing point from down here on September 4th, which has 10 million shares as well. Now, compared to that swing point, you've got some volume. So if it closes under 106.67, I would say that Gilead likely headed for 100.55 and 103 and a quarter. Let's go take a look at Regeneron Pharmaceuticals out here, REGN. And that has rejected the top of the August 24th swing point. That is priced out at 526.10. Volume there, 1.7 million shares. You've done 528. Again, you now have a rejection on price and volume of Regeneron. So Biogen pulling back on light volume hasn't tested the swing point. Celgene and Gilead both on light volume into that August 24th swing point. Let's go take a look at Amgen. Let's go finish this off. AMGN is the ticker symbol out here. This is looks weaker than the first four that we took a look at. I say that because it's well within inside that August 24th swing point. That has got volume of 8.6 million shares. You've done 2.5. Boy, you're pulling back with light volume. Very likely, as long as this trades in here, it looks like Amgen is the one that's going to go test the August 24th level. Not necessarily today, not necessarily tomorrow. Maybe it has support out here at the bottom of this September 4th level, 145.75. I don't know whether it does or it doesn't, but this is the one that probably goes and tests that Amgen low on August 24th at 140 even. Steven, let's do one more out here. ILMN. Since we're on a roll, that's Illumina. That's a 4% of the awaiting structure. Let's see what this has done here. So this is tested the top of August 24th. That's at 199.07. Volume there at 2 million shares. You've done 6.7. Light volume. The actual low so far on Illumina, 199.02. Whoops, didn't mean to put that. So, as we take a look at the IBB, yeah, dollar-wise lead the charge, but I'm not buying it. Are you buying it? At this stage of the game, at 142, everything that it looks like you and I have looked at has basically got light volume. Yeah, you're closing inside a swing point, potentially. We won't know till the end of the day. But it just simply supports what you and I are taking a look at inside the summation index, inside the NASDAQ composite, so the larger composite, the 3,000 stocks out there, that actually say that buyers are the ones that are in control of the market. Same thing. So we've got this beautiful battle, an absolute beautiful and epic battle between the buyers and the sellers. And I'm telling you, trying to trade the indices to the upside or the downside out here, you've got to do it on a intraday basis out here, because this is chop, chop, fizz, fizz, and there ain't no relief until we see some kind of trend begin. Let's go take a look at some other things that are moving inside the market. How about Goldilocks? What is gold doing out here? Boy, if ever there's a breakout that would be underway, it is in gold. Let's go take a look at it. Of course, you and I, we are not going to go take a look. Well, we are at the moment, but in just another minute, we are going to not take a look at gold priced in dollars, because Jimmy cracked corn, and what you and I care about is gold priced in euros. Right now, you got that priced out at 10.12. It takes you 1,012 euros to buy an ounce of gold, and guess what it has done? It moved into that trend line with a wide-ranging bar, at least with regard to gold priced in euros. And today, you are up above that level. That is a breakout. Now, if gold pulls back, tests it, rejects it, and then moves higher, you've got your first wave out there where you should start. I can tell you that there's traders around the world. This is not just you and I paying attention to this, but gold, actually, even though it's pulled back in U.S. dollars out here, actually not too shabby considering the U.S. dollar index is to the upside. U.S. dollar index is up a whole point out here, trading out at 96 dollars and a little bit of change, and I have a 10-minute delay, so it could be just a tad higher than that. So gold in dollars, which is off 4.90, I don't really think that that is the big news of the day in gold. I believe it's the mere fact that gold priced in euros has broken out. So what does that say here with regard to gold priced in dollars? Well, if we go take a look at it, we'll go take a look. That's the top portion of my screen out here. Price ought to head up towards that resistance level. And that is in about the 1147 area. 1145, 1150. Why don't we just call it the swing point here from August 24th? And that high is 1169. The bottom is 1153. So any close above 1153, that says that you're going to go test 1169. But more likely than not, you're going to move much higher than that, probably into about the 1230, 40 type range out there inside gold. So gold has given you a breakout signal priced in a different currency, a currency that I believe actually matters to both you and I. If we go take a look at silver, silver is up a nickel. We'll actually take a look at the silver contract. Nothing bearish as we take a look at it. It's trading inside the swing point from August 21st, the bottom of which is 15.15. You're at 15.22. That says that price ought to get up and test 15.77. If we go take a look at a couple of the mining equities out here, well, let's go take a look at the GLD, actually. That's down 60 cents today. This was up with some decent volume over the last couple of days, 8 million shares on September 17th. You pulled back with 3 million shares today. About 7 million shares on Friday. Again, you've done 3 million shares. So we're seeing a light volume pullback inside of gold if we take a look at the ETF structure out there. If you and I go take a look at a couple of the individual mining equities, let's go take a look at Rand Gold, GOLD as the ticker symbol. Up a couple of days ago with 1.3 million shares. Friday, 2.9 million shares. Back today on light volume. I like this setup here when we take a look at gold. I like this setup when we take a look at the mining equities. What these mining equities are actually doing is setting up an A to B equals CD to the upside. If we go take a look, let's put in our TAS market profile, see if we can find some additional areas of support. In the case of Rand Gold Resources, that support level, that buy is probably 58.43. Don't know that you'll get it, but if you did, 58.43 would be your first potential buy, and 56.21 would be your second buy area inside of Rand Gold. If we go take a look at Gold Corp, GG is the ticker symbol. On Friday, up with 14 million shares. The day before, Friday, 15.8 million shares. The day before, 14 million shares. The pullback today, 3.9 million shares. Can you say light pullback? Look, folks, if you're going to take a look at Gold Corp as a light pullback here, and after what I just did on the IBB, you got to take a look at them consistently. And it wasn't the IBB. Instead, it was the underlying assets, or the top 5 or 6 that we took a look at with regard to their pullback here. Really looks similar. I didn't have the TAS profiles, but at this stage here, Gold Corp, as long as this can hold the 1325 level, that would be very impressive. That's the top of its daily box. Let's look at one more out here. Let's look at, let's go take a look at Barrick Gold, ABX, an absolutely ugly looking stock chart out here. But nonetheless, on Thursday up with 27 million shares, Friday 28 million shares, today pulling back with 11 million shares out there. In the case of Barrick Gold, you can see it ran right in the resistance of its weekly market profile, and that's at $7, even Steven. Let's go out to Nashua, to our man Lou. Lou, thanks for calling. Thanks for holding. How you doing today? Uh-oh, I don't hear Lou.
Hello?
Hello, Lou. How are you today?
Good, good. Thank you. The S&P, what do you see that doing? I just tuned in now, so I don't know if you mentioned anything about it earlier.
But what is? Well, tell me what you're looking for. What do you think?
I was looking for a short.
Looking for a short. So you're looking for a short, and you're trading the ES Mini?
No, actually, I was trading SPXS.
SPXS. Okay. So here's what I would say if you're not in that trade. I would say if at the end of the trading session, I tell you what, Lou, can you hold on through this hard break that we've got?
Sure.
Okay, we'll go back to Lou, and we're going to go take a look and see if we can find some spots for Lou to try to take a short inside the S&P 500. Steve Rhodes with TFNN. We'll be right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. This coming Tuesday, September 22nd, Tom O'Brien will publish the 700th issue of his weekly newsletter, The Gold Report. It's amazing to think that Tom started his newsletter over 13 years ago when gold was trading under $300 an ounce. To celebrate the 700th issue, you can sign up right now at a 20% savings off the regular monthly price, and you can lock in that low rate for as long as you remain a subscriber. The Gold Report is Tom's weekly newsletter covering the gold market as well as a variety of gold mining equities. The Gold Report is published every Tuesday afternoon with a market update sent out to subscribers on Monday mornings. Tom will walk you through what's going on in the gold and metals market each week, as well as providing specific buy and sell recommendation on the mining equities themselves. Now is the perfect time to sign up for the Gold Report. The 700th issue is published Tuesday, and that's when this sale ends, so act now.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 79, S&P is up 5. We're on the line with Lou from Nashua, and Lou is taking a look at trading the 300% ETF short the S&P 500, which is SPXS, if I heard you correctly.
That's correct.
Perfect. Okay. So, Lou, here's the parameters that I would take a look at since you're not in the trade. In order for that trade to fire off and be successful, one of the things that you're going to want to see is the SPY itself close below 195.84. The 195.84 level is the top of the swing point from August 24th. We could even use the top of the swing point from August 25th, which is 195.45, and even make it a little bit more difficult. even if we take a look at that trading session, August 25th, which has 369 million shares, today's pullback and test of that swing point has been on super light volume, 65 million shares. 65 million shares testing 369 and 507. It's actually saying that it doesn't have the energy to bust it to the downside. However, because you want to get into that trade, if in fact it were to close below 195.84, preferably close below 195.45, then you could go ahead and take that trade. But you'd want to make sure you've got a stop in place. And if you see the SPY close back above those levels, you take your small loss and you will wait for another opportunity. Ideally, the better trade setup for you is to actually wait for the SPY to bounce up into the trading session from a few days ago, September 17th. Because if it can get into that candle, maybe test the bottom at 199.28 and reject that level, meaning close below that with less than 276 million shares, that would be a better time for you to take the short and enter your long trade on SPXS out there. So those would be the two things that I would use and just take a look at the ETF for that trade out there. One additional thing I would say is take a look at the VIX index, the volatility index. If the volatility index closes today by any chance or at any point, closes today below $20.64, don't even think about a short trade in the S&P 500. At this stage, it's above that, so it says, okay, that I can see where you would look at that trade out there. But utilize the numbers, if you would, that I gave you inside the SPY. At least consider that before you take the trade in shorting the S&P 500. Does that assist you with that?
Yeah, sure does, Steve.
Okay. I mean, any other questions? Because I was relatively quick view of it, but I'm pretty comfortable with the numbers and the data that I gave you.
Great. Appreciate it.
Okay, you bet. Thanks so much for listening. Thanks for calling. That was Lou in Nashua. And again, he was using the vehicle, or is considering using the vehicle SPXS, which is the inverse relationship to the S&P 500. So to go short, he's actually looking at the long trade there. Had a question if I would go take a look at GCEU, it looks like. So let's go take a look at a GCEU on the daily. Is that the question? Maybe GC, and if it is, I'm not pulling it up. GCEU. So maybe, that's gold in euros. Hello, just knocked me upside of the head out there. Sorry about that. If we take a look at, there was a question about a Vale out here, Valley, VALE. If we take a look at it, this thing had a nice little sign of strength on the trading day of August 27th out here, 41 million shares to the upside. Where was I looking at? There we go. Now, this ran into resistance. So you had a nice sign of strength off the bottom. You like to see that little gap up. But this has run right into resistance. Its wall of resistance happens to be its TAS market profile on a daily basis. So this equity just simply needs to get above 5.25. If it does that, pretty good chance that it's going to run right into the bottom of its TAS weekly box at 582 out there. So, folks, stay tuned. Our man David White is up next. Have a marvelous and a magnificent Monday. Thanks so much for being here. I look forward to seeing you on Turnaround Tuesday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.